So a lot had happened over the weekend. We had a budget which has shattered the expectation of investors and traders, and we have seen market been tumbling nearly more than 3%. We had another event where India has won by 5-0, beating the New Zealand in T20. So that's the another historical win for India. So coming on to the markets, we have seen that markets have been underperforming in last 1 month after hitting a high of around 12,400. And even if you look at the Bank Nifty, which has underperformed the Nifty in the January series, which had a hit around 32,500 highs, and back to below the key psychological support zone of around 32,000. And even 30,000 has been breached down, and we have ended the week at around 29,000 sub 800. And I don't remember when was the last time when major of the sectors were down and Nifty being more than 2.5% down. So apart from Nifty IT, which was again the savior in yesterday's session, gaining nearly 1%, leading by TCS, Tech Mahindra, and Infosys. Obviously, TCS was the leader with 4% gain. But if you look at the other sector, we have seen nearly around 2 to 4% down on major of the sectors. Even if you look at the Bank Nifty, we have seen huge shorts being built up since January series. And if you look at even the January series, Bank Nifty was the one who has dragged the markets initially. 4% down in January series, followed by Nifty, which was nearly 0.5% compared to other sectors. Second, if I just look at the markets, we are expecting slightly more downside coming onto the markets. We have nearly at around 200 as average, which is around 11,660. And even if you look at the Bank Nifty, we have reached the 200 days mark of around 29,992. And closed below those levels. So we think 11,500, 11,550 stands out to be a very, very key support zone. And probably another couple of weeks, we might see a negative bias to range bound on the Nifty. Another couple of percents can be expected on the downside. Overall, we think probably by the end of the Feb or second or third week of Feb, we are expecting markets should take a rebound, and again 12,000 can be reclaimed soon. Even if you look at the Bank Nifty, we think 29,500, 29,300 stands out to be a good support zone, and from there we might see a rebound rally. This month we have seen that January series has seen a huge money rotations starting from the large caps to mid caps. Even if you look at the Bank Nifty stocks, even if the Kotak Bank, HDFC Bank, Axis Bank, ICICI Bank, we have seen slow and steady long unwindings coming under the picture of the start of the January series, money rotating from banking space to FMCG space. And even if you look at the IT space now, after I guess in August or September, it had hit a high. And since then, for 5 months, we have seen a range bound session coming on, or the negative session coming on from the IT space. But now money has rotated over there, and we think IT would again take a lead. And the reason why IT might take a lead, because the budget expectations, which was not expected by the street, as government has not announced majority of the things for investors and traders. Dollar rupee would play a key role, and we are expecting rupee to slightly have a bearish view around 72, 72 plus on the rupee, and that might again benefit the IT stocks. So that's the reason we are expecting IT stocks to continue its very bullish momentum. And the second leg where money might come rotation, it's the FMCG space from realty space. We have seen yesterday realty space, or in the Saturday session, we have seen realty space beating nearly 8% down. And clear profit booking was seen there even after the strong rally in DLF, or you may say another realty stocks. So money has been clearly moved out of the realty space after that, after the street expecting that some reforms might come up for the realty and infra space, but nothing was expected from the budget. So money has clearly rotated from realty space, and majority, if you look at the after the budget session, most of the traders or most of the investors would like to see a bargain buying levels in FMCG space. And FMCG is the one which we have seen a huge recovery, be the likes of Dabur, be the likes of HUL, or be the likes of Britannia. So we think these three stocks might again take on the higher space. We are avoiding ITC and Marico, because if you look at the structure, Marico and ITC structure stands out to be slightly on a weaker side technically, but Dabur, Britannia, and the HUL might see again a good upside rally. So we hope this week be slightly 11,500 550 stands out to be a good support zone, and we might see some bargain buying coming out from those levels.